Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Joe Cavatoni, head of Americas with the World Gold Council, to discuss gold's performance and how an inflationary or deflationary environment could impact the metal. Joe, it's great to see you. Welcome to Trade Talks.
Thanks for having me.
Last year, gold finished up 25%, breaking records in terms of price in US dollars, as well as inflows into gold-backed ETFs. Do you expect this rally to continue as the new year progresses with hopeful signs of an economic recovery and positive vaccination news?
I think 2020 demonstrated fantastically for investors exactly how gold will perform in a portfolio. It was up 25%, as you've mentioned, but also if you look at drawdowns in terms of how gold performed throughout the course of the year, maximum drawdown was just a little bit under 5%, more around the 4% level. So you're seeing returns, you're seeing maximum drawdowns at a very low level. And really what it's doing is it's performing in an uncertain or risky environment. So for 2021, our outlook is highlighting the fact that we still have a lot going on with respect to ballooning budget deficits and central bank involvement in trying to manage these economies under these risk environments, ongoing market risk and concerns around volatility that comes with that, a buoyant equity market, and globally, we're seeing seriously still knock-on effects of what's happening in terms of COVID-19. Now, we're seeing bright spots in terms of things developing around vaccinations, but with ongoing concerns around lockdowns and the economic effects of that, and ongoing concerns around different strands of COVID-19 coming on, you still have a lot of uncertainty. So what we're seeing for 2021 are significant risks on the horizon, and a real need for people to understand that managing risk comes with having gold. Gold's a dual-natured asset, performs well in economic growth and expansion, but protects you in market risk and downturn.
And gold-backed ETFs, as you mentioned, saw strong inflows in the first 3 quarters of 2020. World Gold Council recently released data around January gold ETF activity, which is now seeing inflows after outflows during the last 2 months of the year, and global assets under management is just 4% shy of the intra-month record set last November. Can you expand further on the activity that you're seeing?
It's a great question and really a great piece of insight for people to understand the gold market. Gold is a global market, and what the ETF market's now demonstrating for us is that there's total transparency in terms of investor sentiment around owning gold. So what you saw in 2020 was definitely record-setting levels in terms of price growth in the ETF market, and an incredibly important piece, which is a balance between the US market and the emerging or the European markets owning gold-backed ETFs. So over the course of the year, we grew about 50 billion in terms of overall AUM growth. 30 to 32 of that was in the US, 18 of that was in Europe, and the residuals out in Asia. So you're seeing a balance of growth in the ETF market worldwide. Now into 21, what we're seeing is some flows that are out for the US market. Now you've got a new political landscape in the US. We're watching all of that bed in terms of new policies and how the Biden administration is going to take the economy forward. So we're seeing just about flat for month to date in January and into February for the ETF flows in the US, but you're seeing Europe still having the inflows, which is carrying it into positive territory. So it's global. Pay attention to what's happening around the globe in terms of gold behaviors and the price performance against those different economies. And you're seeing the ETFs giving you transparency into that.
And gold performance in a low interest rate environment, how will the asset perform as investors' risk appetites increase?
So gold's done fantastic in a low interest rate environment. And really low and negative rates, again, amplifies the fact that this is a global phenomenon, but an asset that can help you out on a global scale. So when you look at what you try and find from an interest rate environment, you're trying to find bonds and steady income that protect your portfolio with stable holding of assets. Gold's done fantastic in this environment because when bonds haven't performed as people had expected, they've gravitated to just that. So while rates may be moving in certain markets, this is a global phenomenon in terms of lower negative real rates, and gold performs exceptionally well in that environment. It provides you that steady opportunity cost of having that value in your portfolio.
Inflation is top of mind for investors. How could this impact gold as an asset, and what happens in a deflationary scenario as well?
So central banks, including the Fed and the ECB, are all kind of signaling a tolerance for higher levels of inflation. So in that environment, our historical data has told us that when inflation is at or higher than 3%, you're going to see gold prices achieve about 15% on average. So in an inflationary environment, gold's going to perform. Conversely, in a deflationary environment, our research and other independent research from organizations like Oxford Economics show that low interest rate environments and higher financial stress that comes along in that kind of an environment increases the level of demand for gold. So when you watch the inflationary, deflationary discussions and the expectations play out, really understand that strategic drivers of gold, economic expansion or market risk and uncertainty, is why gold will perform well in both of those types of scenarios. So where we go, to be determined, but know that gold has a role to play in that environment.
And Joe, last year, central bank buying activity was down almost 60%. And what can we expect in 2021?
So remember, with central banks, we're coming off record-setting years. So 2020, while a good year, it was not where we had seen it in terms of record-setting years. We've seen a lot more central banking activity in the gold market worldwide, particularly out of the emerging markets. We've got a number of reports on this and a lot of data in our most recent gold demand trends report that people should take a look at. The selling that we saw was concentrated, but what we're going to expect into 2021 and what we're starting to see already is a continued return to buying by the central banks. We're probably not going to see those levels of records that we'd seen in the past, but you should see that gold still will play a part of the portfolio for a central bank going forward.
All right, Joe, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.